So you know how the media has been saying that house prices are going to crash because people will go into negative equity? In this video, I'll be going through why that's nonsense, and actually investors are able to offset so much of those interest rate rises by higher and higher rents. How negative equity isn't a problem, and nor are really interest rates for those who have invested well. Carry on watching, smash the subscribe button, give it a thumbs up, and if you've already subscribed, give it a notification bell, hit so you get every single video every time it's released. Let's go into this. You've probably already seen this chart, right? My name's PK. Let's go into this. What it's showing is outstanding LVR distribution. Stick with me, don't lose me. I know it's a technical term. LVR means leverage ratio. So if you have a property worth $100,000, let's say, and your loan or mortgage is $50,000, your LVR is 50%. 50 over 100, 50%, okay? So what this is showing is right now, or very recently, February 2022, this is the distribution curve of what Australian households' LVRs are. So you can see that the basically maximum LVR right now, this red line, is 100%, and like in any normal distribution, the majority of people are in the middle, around that 50% LVR position, which tells me that it's very safe. It tells me that no one has negative equity right now. It's not like people have overstretched themselves, and this, we're talking aggregate data, right? There's always exceptions, but aggregate data, Australian housing market is very strong, and APRA know it. The regulatory authority, the government, the RBA, everyone knows that, okay? Now, here's a really cool thing. Let's compare this to how this LVR position was in January 2020, this purple line. Now, this is before COVID. This is before, everyone was saying house prices are going to crash like they are now, at least the media is. You can say that the LVR position was actually worse back then. You can see back then that this portion of people, let's say, 10%, 7% of households actually had negative equity. They had a loan that was higher than their property value. In other words, all the way up here, some people had an LVR of 125%. Whereas right now, this red line, people's LVRs are much lower, obviously because house prices have risen. What does this tell us? Now, I know that the media is saying that house prices are going to crash, maybe 20%, maybe 40%. My personal opinion based on data is that some areas will correct a lot. I've been talking about this for ages. Sydney, Melbourne, maybe 5 to 15% retracement. Okay, retracement. So let's say the national property market, and this is not true, every single location and across Australia retraces by 25%. 25%. Okay, it's just not going to happen. But let's say 25%. There's markets within markets. Sometimes some areas right now are actually booming. They'll go up 25% in the coming years. But let's say every single area goes back 25%. What you're seeing is that this red line will shift to the right and become like this purple line. This 100% percentile position will shift to the right because house prices will fall. And assuming the mortgage amount stays the same, your LVR, if house prices fall by 25%, your LVR will increase, just for argument's sake, by 25%. And so therefore, we'll go back to how we used to be. And in January 2022, house prices were increasing. They were steadily improving. No one was talking about a 40% crash except for like Harry Dent, one guy. All right, so and he's been saying the same thing for 10 years. So my conclusion, or what I'm trying to illustrate, is that negative equity is not a problem now and is not going to be a problem in Australia for the foreseeable future. So any friend, colleague, relative, whatever, property person, expert, media, whatever, economist that says house prices will fall, there'll be forced foreclosures, mortgagee in possession because people will be underwater in their mortgages and with negative equity, with a mortgage or loan more than the value of their house. They don't understand this data, which is coming from ABS, CoreLogic, RBA. And the second thing is for property investors who already have properties, or for those who are going to invest very soon, they're going to be able to offset that additional interest costs that we're all experiencing by additional rents. What do I mean by that? Let's go to this first chart, quarterly median weekly advertised rents. Okay, this is from realestate.com. Capital cities, every single capital city, okay, every single capital city except Sydney, this red line, has experienced at least 10%, if not more, increase in their rents over the last 1 to 2 years. How does this track for regional areas? This is the regional chart. Every single regional area, with the exception of regional Northern Territory, has gone up by at least 15% in their rents. Okay, so a lot of these additional interest repayments of, let's say 10, 20, 30% that we're experiencing are being offset by higher and higher rent charges. And we're in a crisis at the moment. There's not enough houses. Renters, they're just not able to find affordable housing, and the problem is going to get worse and worse. And I've done many videos on that recently. You can see that the 25 top regions nationally with the highest year-on-year increase in weekly rents, all the way up to here, is 23%. West and Northwest, and there's places like Launceston, Richmond, Tweed, Coffs Harbour, the Gold Coast, Sunny Coast, Darwin, Murray, Hunter Valley, Newcastle, Mandurah, Bendigo, Perth, Shepparton, another one in Perth. Rents are rising in almost all parts of Australia. So for investors, they're able to hold their properties because they are able to increase their rents, not just because they want to, but that's what the market is allowing them to do. Supply, demand. Whether it's a good thing for renters or not is not my position to say. That's a social problem, but economics is allowing it to happen, and that can be blamed to the government. Monthly total rental listings. So what will happen in the future? Demand, supply. You can see supply is steadily going down for rental listings, both in regional areas and metro or capital areas since the last 2 years. So as supply goes down and down, and even if demand remains the same, which it won't because we're about to receive 200,000 migrants into Australian shores, demand goes up, supply goes down, rent rockets through the roof. So a lot of those additional interest repayments absorbed by higher rents for property investors. So where should you be buying? If you've reached this part of the video, kudos to you. It was pretty technical. So where should you be buying? For people who are in New South Wales, realestate.com is saying that the 12-month change, there's been additional 91% people searching for properties from New South Wales into South Australia, from New South Wales into Queensland, from New South Wales into WA. So where the search inquiry is, where the demand is, that's where the prices rise the most. And if you're in Victoria, the highest areas where people have been logging onto real estate or domain and been interested in buying properties, the largest area is WA, then SA and Queensland. So it's, you don't get bonus points for guessing which of the 3 states that will outperform in the next 1 or 2 years. But of course, there's markets within markets. Even within WA, there's areas where we wouldn't touch. And there are dozens of suburbs where we would be investing, and in fact are investing right now and across these 3 states. So if you are a property investor, good on you. You should be right. Just block out the media, just focus on data. I'm not here to tell you what to do. Educate yourself. I'm just trying to be an instrument in that service. And if you want to become a property investor, I know it's scary. Like, I get it. And I fully expect, a property spook or someone with a property YouTube channel to say, buy property. Like, that's pretty obvious, right? But cast my opinions aside and understand the data. That's really what I'm trying to do, and make up your own mind whether you should be investing right now, whether you can be ahead of the curve right now, or whether you'll be paying $100,000 for that same property in Perth, Adelaide, Brisbane, regional Australia in 2 years' time, in which case you might as well just buy it now and ride that passive income journey. But understand these things for yourself. I'll leave links below to my podcast, Spotify, Apple Podcasts, and Google Podcasts, and also the Facebook group. More than 20,000 people, actually, not 200,000, 20,000 people. There's newbies in there, and there's people who have retired off property investing. They just don't have any ego. They're so happy to help, and it's an incredibly kind community. So thank you for being part of my community. I'm so grateful to each and every one of you. My name's PK. Smash the subscribe button, and I'll see you in the next video. Catch you later.